All right, welcome to Talk Tickers. Today, we're diving into Buckle's Q2 earnings. And let me tell you, they didn't just beat expectations, they really put on a masterclass on how to stay profitable, even in a pretty tough retail world. Okay, let's jump right into the numbers.
So, Buckle just dropped their second quarter numbers for fiscal 2025, and wow, they really outperformed what everyone was expecting. And yeah, the market gave them a little nod, but the real story here, the thing you need to pay attention to, is how they actually managed to pull off this win.
Okay, let's kick things off with the bottom line. Earnings per share, or EPS, came in at 89 cents. Now, to put that in perspective, Wall Street was hoping for something between 80 to 83 cents. So yeah, they sailed right past that. It's a really strong signal of just how profitable they were. And it wasn't just the earnings, the top line. The revenue was just as impressive. We're talking a growth of 8.3% compared to last year, hitting almost $306 million. That's about $13 million more than analysts were projecting. It just shows you that customers are still showing up and spending. And here's the kicker. This growth wasn't just some online fluke. No, it was super broad-based. Their comparable store sales, the sales in their actual physical locations, were up a really healthy 7.3%. That tells you their brick and mortar stores are doing great. But at the same time, their online sales absolutely surged, jumping almost 18%. That's their whole omnichannel strategy just firing on all cylinders. So you gotta ask, how did they pull this off? Well, the market's reaction was positive, but kind of modest, right? And that tells you something. It tells you that savvy investors are looking beyond just the headline numbers. They're trying to figure out what's really driving the engine here. So let's do exactly that. All right. When you look inside the growth engine, what you see is a really disciplined strategy that's just clicking. It's not just about selling more stuff. It's about selling smarter. And a huge piece of this puzzle is their private label strategy. We're talking about Buckle's own brands, and they now make up almost 44% of their total sales. But get this. This is the 10th quarter in a row that this number has grown. That is incredible consistency, and it gives them so much control over their product and, more importantly, their profits. Now, if we dig a little deeper, you can see exactly where the momentum is. Look at women's denim. Sales just shot up over 20%. In a market that is so crowded, that's a massive win. And check out their kids' business, up 23%. That's proof that they're not just serving their old customers, they're successfully bringing in a whole new generation. Okay, but here's where the story gets really compelling, because it's not just about making more sales, it's about making those sales more profitable. Their gross margin went up by 0.5 percentage point. But even better, their operating margin jumped 1.3 percentage points. That's 130 basis points. What does that mean? It means smart cost control and less discounting. That is a formula that investors absolutely love to see. Okay, let's shift gears and talk about the earnings call. The feeling you got from management was, optimistic, but also very grounded. They're aware of the potential risks out there. They've got a solid plan, but they're not putting on any rose-colored glasses about the broader economy. Right. So during the Q&A, you could tell the analysts on the call were really zeroing in on a few key things. They were basically trying to figure out, is this performance sustainable? And what headwinds are on the horizon? So the whole discussion really boiled down to four main topics. First, the potential impact of tariffs on their costs. Second, what was really driving that fantastic margin growth? Third, those rising occupancy expenses. And finally, the benefit they're seeing on their SG&A costs now that they're past some of the heavy digital spending from last year. When it came to tariffs, the CEO, Dennis Nelson, was pretty direct. He basically said they're seeing potential cost increases in the low to mid-single-digit range. Now, that's not a huge red flag, but it's definitely a headwind they're watching and actively managing. And if you follow Buckle, you know this is their style. They didn't give any formal forward guidance for the future. They kind of prefer to let the results speak for themselves. It's a cautious, but you could also say confident stance. But hey, just because there's no formal guidance doesn't mean there's no plan. Not at all. Management laid out some really clear priorities for the rest of the year. They're going to open 4 new stores, complete 12 big remodels, and keep on investing in their digital side of the business. So let's put it all together. What does all this actually mean for the stock going forward? Well, it's time for the next call, our take on what investors should be watching for. Okay, so the bull case here is pretty clear, right? Their private label strategy is just crushing it, they're super disciplined with their margins, and they've got real momentum. The bear case, well, that really hinges on stuff that's outside their direct control. Tariff pressures and the rising costs that come with their store upgrades. So, where do we land on this? What's our call? Based on this really impressive quarter and what seems like very clear-headed execution from management, here's what we think you can expect. We're predicting they'll keep this momentum going into Q3, driven by those private label sales and their tight grip on margins. And look, as long as they keep executing this well, we expect the stock to continue its steady climb. So, given their strong operational control, that undeniable momentum in their private label brands, and their proven knack for expanding margins even in a tricky retail environment, our rating for Buckle is Outperform. And that's our call on Buckle. Just a reminder, as always, this analysis is for informational purposes only. It is not financial advice.